Hello, and welcome to part two of the LPF series on franchising. This is a follow-up to our In Real Life part one, which took place back in May. As the LPF, we've seen an uptick in the number of franchising transactions in the UK over the past couple of years. Members on the day had an awful lot of questions. We weren't able to get through them, so we've asked the panel back to film part two. So by way of an introduction, I'm Alex Hutchins. I'm a lawyer and head of real estate at Agreements Legal LLP. I specialise in helping hospitality and leisure operators with all their property needs. I'm pleased to say we've got Kieran Smith from Anytime Fitness, Richard Kay from Pressman Collard, and Ian from Freeths. If there's anybody watching who didn't make part one, the presentations will be available on the LPF website. And we're going to go straight into today's Q&A. Richard, I'm going to come to you first, if I may. So the British Franchise Association has the UK home to about 1,000 franchise systems, which are around 50,000 units. The US, by comparison, has got around 792,000 franchise units as of 2022. Why do you think we lag behind? Is it purely the American dream, everyone wanting their own business, or something else?
I had the same conversation with Ian, I think, when we were in the UK. The lack of funding to franchising is quite prevalent in the UK, although there's a few banks that do support it. It's very easy across the US to get loans, especially if you are a veteran of the army or if you are looking to start a new business. They are very loan heavy, so you don't have to go in there with your own capital, although you have to have something there. Also, I think you are correct. The US dream of owning your own business is probably part of it. But aside from that, there's also quite heavy legislation in the US which stops people from taking advantage of people. So I'm actually going through it right now with three companies that we work with who are entering the US. For me to do a deal in the UK right now, I don't need to, realistically, I know Ian will tell me differently, I don't have to give anybody a disclosure document. But in the US, I'm currently going through it where I have a client who wants to take New Jersey, New York, and Florida. I had to pause the discussion for New York and Florida until it's registered with the state authority, which will take another 6 months, and I can only do the deal for New Jersey because that's the only one that's available right now. And to do that, I still need to give them 14 days to cool off. I still need to give them a disclosure document which gives them all the information that's necessary. And that is a legal requirement from my side. In the UK, I don't need to do that. So there's no protection really for franchisees at the start. So I think it's difficult to say why it's not taken off in the same way, but I believe that if legislation was put in place, it would be a lot more attractive for people going into these businesses. I think it would make it a lot easier for landlords to then trust that franchisees have got everything that they've been given as a requirement to move forward. And it would allow banks to then loan a lot more aggressively as opposed to the way they do now, which is if you're a new business, a franchise, you get realistically the same terms as if you're starting your own business. Why not give franchisors and franchisees the ability to borrow more because they are a proven system?
So, I mean, picking up on that landlord and trust side, I think actually, Kieran, if I come to you first, I think historically landlords, you could say, have had a bit of a negative impression of franchise businesses. Are you seeing that perception change, and do you think there's anything particularly driving that shift in mindset?
Yeah, great question, Alex. I think it is changing, and it is changing for the better. We have some franchisees that own multiple units. We're involved with some of the bigger groups that own multiple Costas, Domino's, McDonald's, or not so much McDonald's, but we've had McDonald's franchisees come across to us. I think actually it's that age-old challenge around covenant strength. Landlords are always going to want the strongest covenant, but we've seen so many changes in the high street in the past, 5 years. With some of the big retailers exiting. I think actually, 90, 100, 150 stores whole portfolios have gone live and have become available to the likes of Anytime Fitness franchisees. And we've had a couple of units that really fit that example, that have been trading now 2 or 3 years, are doing really well, got a great relationship with landlords. So I think slowly but surely we are starting to turn the dial. And I think that proof of concept, some of the the big brands like ourselves, we've been operating worldwide since 2002. We've got nearly 6,000 units across the world now, and nearly 200 in the UK. I think we can build that confidence with landlords, and particularly for us in London, we've got over 45 gyms in and around London and the M25. So I think actually, there's been multiple times, even with some of the bigger institutional landlords, where we've taken them to see some of our offerings to give them a deeper understanding and sort of get under the hood of what things look like. And I think something I've certainly noticed in the last couple of years is they're much more open to exploring more with us, as opposed to just shutting that conversation down straight away because it's a franchisee. So we're moving in the right direction, certainly, in my view, Alex.
Cool. Are you going to eye up any of the Poundland units that are going to be coming back? They must be ripe for Anytime Fitness.
They really, really are. And yes, we're in discussions on a couple of them already. They're ideal for us. Real curbside appeal. They're the right square footage. They're ground floor. They often don't have any sort of acoustic challenges with residents around. So yeah, they are prime. And we're in discussions with a couple of people at the moment. They're ideal for us, certainly.
Much easier than repurposing a Debenhams, I think.
Totally, because we're having to resize, and for us, it's 5 to 10,000 square feet, and we go much beyond that. The commercial viability becomes a bit more challenging. So, yeah, certainly size requirements wise, they definitely are more suited for us, Alex.
Ian, you act for a lot of franchisees, franchisors. If you got anything to add there around landlords and their willingness to have franchisees in situ?
Yeah, thanks, Alex. I mean, as you know, I'm not a real estate lawyer, I'm a franchise lawyer. So if landlords have had a negative impression of franchisees, I don't really know why. And the reason for that is that franchises are more resilient than owner-operated businesses, generally speaking. Franchises compared to owner-operated businesses have a higher success rate. There's lots of statistics banded around, but one I saw recently was that the success rate in a franchise system can be up as far as 90%, whereas an owner-operated startup can be as low as 15% success. And the franchise model, as Richard said, it's a proven model. And what the franchise model does, the way it leverages the franchisor's experience and brand and customer relations and reputation, etc., is it decreases risk for the franchisee and increases the prospect of success. So against all of that, I'm slightly bemused as a contractual franchise lawyer why landlords wouldn't want to be contracting with franchisees. I mean, from the landlord's perspective, I guess, franchisees often a new co. Franchisees often ring fence the operations in a particular location to protect against one location failing and dragging down the rest of the operation. But that's nothing new. Landlords have been dealing with new cos and startup businesses forever and a day. And there's lots of security options available, none of which are specific to franchising in terms of parent company guarantees, personal guarantees, bank guarantees, rent deposits, etc. In terms of fit out, I know landlords sometimes are a bit nervous about, well, you've got to fit out to the landlord to the franchisor's specification. But if you stop to think about that for a moment, the franchisor's specification is by definition quite a high quality fit out. And it's and it's prescriptive. So actually, as a landlord, you know what you're going to get if you're going to lease to a McDonald's franchisee or an Anytime Fitness franchisee. You know what it's going to look like in there, and you know what the quality is going to be. So I think sometimes Well, I guess I'm not quite sure if there is a negative perception why that's the case on the basis of my view of things.
Yeah. And I mean, we've obviously seen restructuring announced for River Island, which, historically was a good covenant. So nothing's
Yeah,
certain on the high
exactly.
street
Well,
at the moment.
there's plenty of big brands go bust, and big non-franchised businesses go bust. So it's it's a cutthroat world out there, and I don't see, as I say, I don't see that there's really a special case to be made for franchisees in terms of the tenant if you go about your business in the way that you ordinarily would in terms of getting security for what's due to you under the lease and so forth.
Alex, I really feel that Ian's made some excellent points there, but one particularly, we have live examples where a landlord has maybe not understood our brand to start with, but that consistency around what they're going to get, as Ian described, we've been able to, through high quality marketing visuals, send things through so they can review them on their desktop. We have had a massive UK landlord as recent as last week go in to visit one of our sites to understand what it looks like. And I think that consistency on, we are very strict around the fit out requirements and we have to have brand consistency. That's actually given landlords a lot of comfort that, okay, well, this is what it's going to look like. And yeah, as Ian said, we know what to expect. We've been able to win a few rounds, but by having that exact conversation. So yeah, to reinforce that point, that's worked really well for us at any time.
Yeah, thanks, Kieran. I mean, on that consistency point, I suppose, Richard, if we come back to you to start with, and then probably Ian, you'll have something for this as well. How much control has a franchisor actually got over a franchisee in terms of what's delivered? We've all heard horror stories where a franchisee suddenly started selling a product that's not aligned with the franchise business. So how much control have they got?
Realistically, they have a lot of control under contractually. Relationship wise, you do need to be careful. Of course, you're someone's paying you a royalty. You're in a long-term relationship with them. You can't always come down with an iron fist to tell them exactly what they need to do. But if they're going to start selling stuff that's not approved or has not been tested, then of course you have the ability to immediately send warnings and take necessary action. I don't think that really is something that we should be concerned about. If you're looking at from a landlord's perspective, if you've got 100 sites, and I'm going to use one brand as the example, if you've got 100 sites of Pret, tomorrow you're under one company. Realistically, the holding company of Pret is going to make the decision as to which sites are making the most money for them, and they'll keep the ones open that make the most money, and the ones that are losing money, they could close them immediately because they're all under separate limited companies. But if you've got 100 franchisees, it's very unlikely that 100 franchisees are going to do badly. Your risk is completely split across everybody. So even if one of them starts selling, I don't know, let's say a Subway, they start selling a salad that's not approved. Within 3 to 4 days, the franchisor will know about it. Because the feedback immediately comes. I have a brand right now who have an unofficial site that's open somewhere in the world. It's not theirs. And the feedback comes back through Instagram within 24 hours. They've been tagged on it and said, who is this? So immediately a cease and desist letter's gone out. There are provisions in place throughout the entirety of these contracts. Realistically, a franchise agreement is 50, 60, 70 pages long. And they are very favored heavily towards the franchisor. So there's always risk. But franchisees, they can't just run around and do what they want to do. And if they want to do that, they shouldn't be a franchisee in the first place. And we have methods and processes we go through to make sure that they're not brought into the system if we think there's a massive risk of that.
And Ian, from your side.
Well, in terms of the amount of control that the franchisor has over a franchisee, I mean, I agree 100% with what Richard said. In terms of the contractual controls over the way in which the business is operated, it's that's how franchising works. In terms of the real estate perspective, I think that's quite different though, because I think the franchisor will have relatively little control over real estate matters. It depends entirely upon how the system's been set up. Some franchisors are very real estate heavy. You look at McDonald's, for example. Some people often talk about McDonald's as being the biggest real estate company in the world that flips burgers. Because their strategy is to hold real estate and then sublet it to their franchisees. Other franchisors don't want anything to do with the real estate transaction. They don't want the real estate risk sitting on their balance sheet. So yes, they'll have controls around in the franchise agreement. If you lose the lease, the franchise agreement can terminate. They may try and negotiate with the landlord through the franchisee, of course, because the franchisor has no direct relationship with the landlord. They may try and negotiate step-in rights or automate automatic rights of assignment to either to themselves or to a replacement franchisee. So in that respect, some degree of they try to create a relationship with the landlord in certain fundamental respects, but they don't really exercise control over the franchisee. If they're in the category of let the franchisee find the site, we'll approve the site location, we'll approve the lease, we'll approve the fit out before you can open. That's all standard stuff. But franchisors, particularly I think in the US, over the last few years, there's been a growing concern over vicarious liability. And this comes through control. So where franchisors have been found to be liable for franchisees' breaches of statutory duty or for employment rights, for example, there is this concept that's coming through the US, which we don't currently have in the UK, of joint employer risk. The reason joint employer risk exists is because franchisees have made the case that the franchisor exercises such a degree of control that they are de facto the employer, and employees then point their claims at the franchisor because they've got much deeper pockets than their employer franchisee has. So from a control point of view, franchisors, I think, are trying to stay well away from exercising too much control, so that they don't get on the wrong side of a vicarious liability or a joint employer claim.
Yeah, too much control can be a bad thing. Yeah, fair enough. Thank you for that. Kieran, we heard a bit about the leasing strategy there and being real estate heavy, with McDonald's as an example. I mean, I've seen a number of approaches, either franchisors taking the lease and subletting, which would be quite costly from stamp duty perspectives, as well, or letting franchisees just take the lease. I mean, what do Anytime do typically, and how do you make that decision?
It's the latter for us, Alex, although that never say never, that may change in the future. We, along the lines of what Ian mentioned, we will try to negotiate step-in rights. So we have first right of refusal as a main co to take that site on. We will agree in heads of terms how the landlord may elect to choose security for an incoming franchisee. So we do resales, and often if there's a perceived higher covenant strength from the incoming franchisee, the rent deposit may be able to be negotiated. So we always try to negotiate a non-like-for-like transfer, but it very much sits with the franchisee. That's how it works in Anytime. We've got 185 trading in the UK, and look, I would be underplaying it if I said sometimes that doesn't need to take some selling, if you like, to the landlord. They'll have concerns that, well, what if this doesn't work out? So our starting position always is the power of the brand, it's the power of the model, our success rate. Where we often end up is, once we've sort of overcame that objection, is rent deposits usually sit higher. They will sit at 6 months rather than 3, or there's a time capped cross company guarantee. It's those sorts of things that we do to overcome any concerns that a landlord may have. But yeah, that would be how it works in Anytime Fitness.
And do you have any say on locations, or is it just that you've sold a territory to a franchisee and they go find a space where they think works?
So that's where we have a massive say, and that's where it's a huge collaborative effort. We invest tens of thousands in location software. We rank locations. We have a product called Hot Locations that has data, very granular data for all of our 210,000 members, what they look like, the type of neighborhoods they live in, the age profile. So a real good sense of the demographic profiling. And we look and rank other locations that look and feel the same, and they're scored out of 10. It's a heat map: red for the hottest, blue for the colder locations that wouldn't have the same propensity to buy memberships for those customers. And we work with franchisees through that decision making process on which location to select before then embarking on the site acquisition and property within that location. So we work very, very hard on that, and making sure that we've got the highest confidence level we possibly can about a franchisee, owning that territory. That's their license. That's what they're investing in. So it's that decision is an important one.
And I suppose competition at the minute for prime sites is heating up, particularly in London. You've got vacancy rates on Oxford Street, Carnaby Street, lowest possible for a very long time. So, Richard, Kieran, how do your brands stand out to landlords? What's the sell? How do you get landlords to take you seriously over kind of corporate governance?
If we're talking about the franchisees, I think, look, the strength of the brand is the number one thing here. If a brand has chosen a franchisee, it's for the relationship with the brand and the landlord, for them to be able to say, okay, we've chosen these people to represent us. So you should take them as if they are us. Now, the big landlords, they don't want to do that. They think that they have to have the control of the overarching company, which we can put in place mechanisms to be able to protect them in that. Realistically, most of the brands we deal with as of today, giving away sites in central London, they'd be very reluctant to, because it's a reputational risk. However, they are starting to come round to the fact that realistically they can't do everything themselves. So we recently did a deal 2 weeks ago for a brand who have, strangely, they have a franchisee in Egypt who also wants to open a site in central London. The way we've got around this, because of course the guy's not present in central London every day of the year, we've done a managed franchise for them. So now it's the franchisee who's paying for everything, but the brand is now going to manage it on his behalf. So that way there is still some control for the brand. The landlord feels a little bit more comfortable. The only thing I will say is that the rental deposit scheme is quite prohibitive. 6 months rental deposit. I mean, I can give you an example right now. In Dubai today, I can go and do a rental deal and I will pay 5% deposit in any landlord. So long as I get approved, it's a 5% deposit. Now, okay, that may not be, the best way to do it, but it is an example of how outside the UK, it's more aggressive in terms of the ability for people to start a business. And I think that needs to be looked at, because 6 months rent in Covent Garden could be 150 grand. Why do you want to lock up 150,000 pounds worth of someone's cash, and then within 6 months they go, I've got a cash flow problem? That 150 grand could have been used to stop that. It could have been used to invest in the sites. It could have been used to be able to use for marketing. There's so many things that you can do with that money that doesn't need to sit in the landlord's bank account for no reason. And it's prohibitive to making the businesses work. So I from my perspective, I would say that there needs to be an overall look at whether, you take a Five Guys site in Covent Garden, it does very well, but Five Guys is owned by one of the richest people in the UK. Now, if you've got a brand coming in who want to compete, it's very difficult. So are we trying to let them compete, or we don't want them to compete?
Richard, we lost a deal. We lost a deal in May this year that we'd been negotiating for 2 months in a really, really strong location. All the perfect demographics. it was fitted out as a gym. Okay, there was lifting platforms, there was everything, honestly, everything apart from the equipment. It had the best HVAC system I'd seen, it no expense spared. The independent gym walked away because they ran out of cash, sort of close to when it came to crunch time. We were negotiating back and forward. We had an incredibly wealthy person that was put forward that was cash backed, and owns two really successful gyms that they were prepared to put a 5-year guarantee on. And we lost the deal because they asked for 12 months rent deposit up front. And it was a £200,000 plus deal. And he had to walk away, and it was right because he couldn't have that cash. You know, for £200,000 on an 8,000 square foot site, you could fit out the entire unit with the best hammer strength live fitness equipment on the market. You could do it for that price. So that's how he saw it. So I completely agree. It's hugely prohibitive, and we've seen that ourselves at AF. It was hard to lose that.
I agree. Look, I don't see how you can be pro making businesses work and stopping people from really using the cash for what it's needful. You know, at the end, what is the business there to do? The business is there to generate income for both the business and the landlord. If the landlord wants money, then you can get money by allowing them to market it correctly, and that will generate long-term revenues for the business, which will then allow them to pay their rent on time. If you tell them, no, I'm sorry, we need a year up front, you're crippling them in advance.
No and if the rent deposit, rent reviews is structured in a way that is viable for a landlord, then they'll get the benefits.
I have a site right now. We walked away from it in King's Cross because the landlord was he just wasn't listening to any reason. He wanted 22% as a turnover rent. We said, okay, we'll do it for 20% for you. He then said, I need 6 months rental deposit. Now, bearing in mind the site is attractive, but it's not as attractive as he thinks it is. So we said, no issue. No. He came back, he said, okay, give me 3 months rental deposit. So we don't need to give you a rental deposit because we're going to fit it out. It's going to cost us almost 600,000 to fit it out. So why are we giving you a rental deposit? We are risking 600 grand. You want an extra 50 grand to cover it? I'm sorry, there's no need.
I mean, on a landlord side, obviously, with rent deposits, as Ian alluded to, a lot of franchisors and tenants are ring fencing sites in SPVs. I think it's probably a case of once bitten, twice shy on some of those. And you know, landlords would say they will look at early release of deposits. I'd imagine sometimes they're a high threshold, 3 times annual rent net profit for 3 years. Like, I appreciate that's high, but I've been involved in other release mechanisms. So I suppose, you know, they're in business too. They do want to help. A lot of landlords do want to help their tenants, but you know, if most of the Debenhams are still empty following Debenhams collapse. So it's a fine balance, isn't it, between?
Yeah, it is. But having said that, if you decided all the time that because of your previous history in business you wouldn't do anything, you'd never do anything. We would never take on another client because we didn't get paid by the last one, or we'd never do a deal because it fell apart at the last minute. Last week I had an email from a guy after he's paid a deposit 3 months ago, quite a sizable deposit. He had the rest of the franchise fee, which was still quite sizable, to pay by the end of this week. And he just wrote an email and said, I'm no longer interested. Thanks very much. You can keep the deposit. Okay, that is quite detrimental to the franchisor because it was around £250,000 that they're losing out in income that's coming into their business. Now, franchisor said to me, I said, what do you want to do? He said, drop it. He said, there's no point in going after them legally because it's going to cost me more in legal fees than I'll ever get out of them. Now, if he was to say, oh, you know what, we're going to stop franchising because of that, it doesn't work. So I think landlords there needs to be a new perspective on it. It can't be that you can say, oh, okay, well, 20 years ago we didn't get paid our rent by Debenhams. Debenhams is not the same business as it was a conglomerate that went down because of the way it was run. That's 20 years ago, Debenhams was a powerhouse. because over 20 years, landlord cleaned up. Now all of a sudden they've got their fingers burnt a little bit. Okay, well, top shop, all these different things happen, but it doesn't mean that the next one's not going to pay their rent.
No, agree. I mean, and obviously landlords will provide some capital expenditure as a contribution. They will often do rent free, to kind of help ease that initial cash flow. It's not that they're not helping, but I suppose real estate is less liquid. If something goes wrong, it's a lot of repurposing, a lot of building works, a lot of planning. Let's not get started on planning, to try and get sites back into use.
It comes down to the brand itself. If you're as a landlord, if you're looking to increase the value of your real estate by bringing in the right brands, then there needs to be special concessions made. If that brand is not attractive to you, then you can hold out for the terms you want.
Alex, just from my point of view, just to build on something that Richard said. So we've got an example right now. Actually, we had a call on Friday where we acted for a multi-site master franchisee that bought a system out of administration, bought 50 odd restaurants a relatively short while ago, and we're in the process now of taking assignments of all of those leases. And just really the point I wanted to pick up on was Richard's comment around, do landlords actually want to promote business? And I'm conscious of the audience that this is going out to, which is why I thought I'd probably say something.
Thank you.
And you can't, one swallow doesn't make a summer. So you can't say, well, this is endemic of the attitude that landlords take. But we've got 2 sites at the moment which we're very happy to take assignments of. We're quite desperate to take assignments of them. And in one, there's a substantial rent deposit, and the landlord is saying we're not going to put it into an interest-bearing account. To which the answer, the question then is, well, why not? And the answer seems to be because we can't be bothered. And you sort of think, well, how is that conducive to getting a new long-term tenant on board who's bought 50 odd restaurants of this brand? They're a serious player. And they just want to get into a lease with you and start paying you the rent rather than paying the administrator to pay you, and this not ridiculous, but this sort of interim situation. And you sort of hold it up for the sake of not wanting to put a significant amount of the tenant's money into an interest-bearing account, which is absolutely no skin off your back. And so, we've got other little examples. I'm not going to trot through them all, but on other properties in this estate. And you think, as a non-real estate lawyer, I find myself sitting there scratching my head going, what are they doing? Why? Just get on with things, get the lease assigned, and get into steady state operation again.
Yeah.
Probably why I'm not a real estate lawyer.
Well, I mean, I've certainly had examples and arguments with landlords as to whether, it goes into separate ring-fenced accounts, interest-bearing accounts, if they mix. I suppose, the advice a lot of the time is it depends on franchisee risk appetite. If they think they're going to do well, they're going to pay their rent, the landlord's not going to need to draw on the deposit. It's not like the bigger picture is get open, right? It doesn't help anyone if they're not open. But yes, I think both sides could probably give a little bit more in that example. Richard, you were talking about brand and buying into brand from a landlord's perspective. I mean, there's a well-trodden path, it seems, of UK businesses going out to the Middle East and franchising. But recently, there's been a lot more brands coming the other way, kind of making international brands making UK debuts on a franchise basis. So Carl's Jr. or Bombird, and obviously Dave's Hot Chicken. Is the UK still an attractive market for these brands?
For the brands coming over, absolutely.
Just any international brands coming over, yeah.
It's still an attractive market. It's a market that's seen as it's like the trophy asset of any brand to come to the Middle East, so to come to the UK. That's why they want to come. Now, are they going to make the same amount of money they do elsewhere? Possibly not, just given the current state of play right now. But for brand awareness, for longevity, coming to the UK is the #1 appetite of every brand we speak to. If they're based out in the Middle East, they're based in the UK or US, anywhere, they want to come to the UK. The reverse is what brands in the UK want to leave. So, but I think that, if you look at the Bombird deal we did it based with Matt, who unfortunately isn't here today, but we did it with Matt because they came over in 2024 to Dubai. They tried the food and they said, this is unbelievable. So we want to bring it back. We know that the brands exist in the UK, but why not bring something in from outside? And for the brand's perspective, they made a lot of exceptions because it was going to the UK. Whereas, if it was going to Saudi or it was going to other markets, they would have said, you know what, these are things that they're non-negotiable. But because it was the UK, because it gives awareness to the globe that you're going there, of course. One of the deals we've done for them, I did a deal for Oman. It was very little we did very little publicizing for it. When it opened, we were like, okay, yeah, it's open, fantastic, it's doing very well. And by the way, it does very well. But with the UK, when we signed, we started telling the world, because that's what it means to everybody. To go to the UK is the #1.
Even I know they want to do 50 sites or something over the next.
Yeah, and look, we called in on every single favor we could get from every single person who had anything to do with the press, because we knew that it was something that would bring business to everybody, and it brought a lot more franchisees to Bombard. It brought a lot more businesses to us, because people want to know, how did you do that? Because realistically, they've only got 7 sites open globally. So how did you agree a 50-site deal for the UK? Because there's a lot of attraction to coming into the different towns across the UK.
And I mean, that proof of concept stage at the minute seems to be getting shorter. So, people are just opening kind of a handful of sites and then saying, right, franchising's the way. When would you say is the right time to consider franchising?
Depends on the brand.
Yeah.
It depends on the brand, depends on team structure, depends on the strategy. I can't say that you can't. Some sites you have one site, and it could be that you've got a team in place that's ready to go franchising. They might have done it for 20 years. And they go, well, we've got one site that's been working for a year. We understand what we need to do. We can roll it out. There's other brands, they need 10, 15, 20 sites. One of the brands we work with today is still learning about their own concept, and they're 42 sites in.
Wow.
They are franchised, but they're still learning which is the best format for each franchisee. So I think if you are profitable, and profitable to the point where a franchisee can get good returns, and you have a good team behind it, then you have the ability to start looking at franchising. If you are barely scraping profits and you don't have anybody, then it's not even worth looking at. Because the onus is on you. Once you start signing for franchisees, and this is what I tell all the brands we work with, you work for them. It's your job to work for them. Unfortunately, that's your job now, to keep them open and making money. Because if they don't make money, it's your fault. Realistically, we have to look at that. It is the brand's fault to a certain degree. If they're not making money, if they're not being supported, if they haven't got all the training needs to be put in place, then there's some element of issue for the brand.
And Alex, just to pick up on what Richard was saying there in terms of not testing the concept out on your franchisees. I mean, it seems like a statement of the glaringly obvious, probably to the people on this call, but to an ambitious business that just wants to get as many flags in the ground as they possibly can, as quickly as they can, and they think, well, okay, we've run a successful corporately operated business. We'll jump into franchising, and we'll start selling franchises after 3 or 4 months when we've thought about where we want to be. That idea of using your franchisees as crash test dummies is one of the things that's absolutely guaranteed to cause the system to fail. What Richard said about you've got to have a successful, scalable, repeatable, profitable concept, and then you can go to market.
Thanks, Ian. And Kieran, what would you say as a franchisor is the most important thing to get right?
Oh, there's so many. There's so many. I think relationship from the franchisor to the franchisees is absolutely critical. You've got to get that right. You've got to understand where the boundaries are. It's recruiting the right franchisees that believe in the product. If there's there's many, restaurants that'll have their USPs, they'll have the things that they believe in and their brand pillars that they'll stand behind. And we do at Anytime Fitness. It's a gym isn't just a gym, it's a different offering for different people. And there are some people that want the premium end of the market that's going to be, your £250 price point. There's others that's going to want a more transactional experience for a cheaper price. We're a service-led proposition. We're a mid-market pricing, but with a high-quality premium offering. But we are a gym floor space. We're not reformer Pilates. We're not saunas and steam rooms or swimming pools. We want to be the very best gym floor space that provides the very best value proposition to our members. So it's important that we take franchisees on, that they have an understanding of that they're vetted through that process. They've got not just the capital and the business experience and commercial acumen, but they buy into the brand and they buy into us. And then that relationship long term is one of, framework that the franchisees need to operate within, but it's an open, collaborative, transparent relationship where they know that we've got their backs, and vice versa. They're going to go out and be trusted to carry out our brand in the right way. So I think that relationship with franchisees is really important. And if I was to put it down to one thing, it's getting that right from the start, because we're a team of 35. It's a small head office relative to other gym operators that run more than 100 sites. The business I worked for previous to this had 200 in their head office at any given time. So we are putting the trust in those franchisees to go and execute and deliver our model in 185 locations. So we've got to get that right: the relationship, the training, the brand compliance. It's a must. Otherwise, your brand is not going to be carried out in the way that we want it to. So that's really important to us, Alex.
Yeah. And obviously that will then impact on your ability to open future sites and how landlords perceive you and all the stuff we've been talking about.
Most definitely. If a landlord is said, "Oh, my local site is Wimbledon," or "My local site is Clapham Junction," or it's Putney, we've got to feel really confident that the owner of Clapham Junction, Putney, Wimbledon, wherever that may be, is in a position to invite them in and can stand up to any scrutiny. That's it's really important. Really important.
Last one for the three of you then, each of you in turn. Where do you see the sector going in the next 5 years? Ian, if we start with you.
I think onwards and upwards, Alex. Simply put, I think it's quite interesting that historically, if you look at the statistics, franchising tends to be countercyclical. And actually, franchising tends to fare better than owner-operated businesses in times of economic, economic difficulties. So I think with the situation as it currently stands, with the amount of economic uncertainty we have, that's probably going to play into the hands of the brands. It's much easier if somebody wants to get themselves established, being their own boss, to set up a business where everything's been done for you, all the thinking's been done for you. The brand already has reputation, it has goodwill, etc. So I just think I think franchise is going to continue to boom.
Richard, same for you, or?
I want Ian to lobby for a change in the legislation. That's what I want. If I can get that done, then I think it will go through the roof. All the countries where franchising is one of the top parts of the economy, they have full-on legislation. Australia, US, Brazil. If that happens, then I think it will fly. I think there needs to be a lot more education as to what franchising really is. It's not just somebody who decides to buy the name, there is actually some systems behind this, and there needs to be education regarding what those systems need to look like. It can't just be a guy who says, I've got a 4-page document from ChatGPT and this is how you run my business. It doesn't work like that. It's hard work to put these systems in place, and they need to be done correctly. And if people understood that, then I think you'll go.
And Kieran.
Yeah, I think you can see the brands that are coming to the UK. There's certainly going to be growth. I think for us, sort of internally, we've been taken over by our Australian master franchisors who have grown from 200 to 700 gyms very quickly. They've come across to us. We had a big, what we call a summit, where we invited all of our franchisees to. That was 2.5 weeks ago, and we've got 10 franchise agreements out for approval at the moment, 5 of which have already been signed. So they really mean business around getting the internal network growing, taking on their neighbouring territories to create real clusters of growth. And so I think for us, we're certainly excited. I mean, in just a couple of weeks, we've seen growth happening before our eyes, and we expect 3 or 4 more agreements to go through this week. So, and I think there will be appetite from, well, I know there will be appetite from the successful guys in Australia coming across and taking sites in London and all throughout the UK. So that's only going to help us, and it will only help our brand grow and accelerate to the level that we want it to. So certainly for us, we're very excited. But I think, yeah, to echo what the guys have said, that the wider piece is it's only going to continue to grow. So yeah, I think it's exciting times ahead, Alex.
Cool. And that managed franchise system Rich was talking about earlier, where the franchisee pays and the franchisor manages, I think we all need to look into that a bit more. Sounds like a great deal. Thanks very much, guys, for joining. That's all the time we've got today. So, Kieran, Rich, and Ian, thank you. Just a reminder to everyone else about the next LPF event. It's behind the scenes at Cans of Water, hosted by British Land. Full details on the LPF website. Thanks very much.